Hello everyone, good afternoon and welcome to today's Trading the Markets Live with the Live Trade Room. Now today is Thursday the 2nd of August. So what we look to do during this live trading session is to identify what we call high probability trading setups. Now we go through a bit of a process with this. We have a methodology to identify the opportunities first of all. Then we fine tune, we specifically select the trades that we're looking at for a specific set of reasons. Then we go into those charts and we conduct a little bit of multi-time frame analysis in order to execute those markets and execute that trading with as much consistency and discipline and patience as we possibly can. Then we'll go through a process where we look to manage those trades effectively, obviously in real time, with one aim, and that is to book in consistent returns. So hopefully you'll benefit from this trading session, despite the fact that we are trading summer markets. Now, we've got a turbulent week this week just because of the central banks. On Tuesday, we had the Bank of Japan sort of look to surprise the market with a little bit of bond purchasing and then the reality of looking to keep rates a lot lower for longer. Then we had the FOMC on Wednesday, and that caused a bit of strength into the US dollar. And today now we've had the Bank of England. So I'll have a look at this very, very shortly in a bit more detail for you. But just before we begin then, I hope you're all keeping well. Please do take a brief moment to familiarize yourself, of course, with the risks involved in trading these markets. So do take a brief moment to familiarize yourself with the risk warning up on screen. Whoops, excuse me. Let me start that again then. So there we go. So that's our risk warning. Apologies. Now, before we begin, let's do a quick review of potential market moving news. And that's really, really important for us as traders to have an understanding of the news flow so that we don't look to get into, for example, we don't necessarily want to go buying the British pound prior to the Bank of England deciding and coming out with their monetary policy statement. So for all of these reasons, it's very important that we have an understanding of the news flow. So we get up Forex Factory then. And what we can see today, Thursday, the 2nd of August, we can see we had a positive trade balance figure out impacting the Aussie dollar. Construction, we had a significant improvement on the construction PMI figures impacting the British pound. However, the big news for not only the day but for the week effectively is the fact that the Bank of England decided unanimously to increase the interest rate by 25 basis points from 0.5 to 0.75. Now, these are still traditionally very, very low interest rates. They are trying to normalize. But I suppose what's taken the market by surprise is two things. Firstly, that the votes, there was an expectation for it to be 702, for example, and we got a unanimous verdict to increase interest rates. And if you go to Forex Factory, you can click on, you can understand the format of these figures and stuff. But basically, there was a unanimous decision to increase interest rates. So I suppose that has taken the market for a bit of a surprise. So initially, we saw a little bit of, that was obviously quite a hawkish development, meaning there was a bit of positive price action coming into the British pound. And it was very, very quickly taken over by the sense that, firstly, Carney made the statement as well during his statement release and also the Q&A. But what he alluded to was the fact that they are on a path to increasing interest rates, but it's going to be very much slow and steady, and maybe even one rate increase a year. So that is in comparison to potentially 4 rate increases over the course of the year with regards to the Fed. So when we talk about divergence of policy, yes, they're both increasing interest rates, but they're doing so at very, very different paces. And one real, obviously, significant concern for the Bank of England is the Brexit developments. So it's going to be interesting to see what comes of it effectively. So that was the major news for the day. So when we take this information, so do bear that in mind when we look at our charts, and we'll go straight into the pound dollar. And really we were looking for opportunities to sell below the 30.80 level. Let's go into the smaller time frame. However, we were looking for opportunities to sell this bit of price action, the 30.82. You can see the sideways moving price action going into the news. So really, when we say we need to exercise a little bit of patience and understand the news flow, what we're really saying is we don't necessarily want to be jumping in and out of this market between these levels prior to the news being released, which was just here. And we saw a really strong bullish move and then a complete and utter reversal. So there is, if you keep abreast of the news flow since the news release, there seems to be quite a hawkish approach, certainly to develop. Sorry, a dovish approach to the pound. Many calling for the price of the cable market or the pound dollar market to be maybe even down as far as 115 or 110. So that is very much in keeping with our overall view on the British pound. We've been looking for multiple opportunities to trade this since effectively the beginning of the end of April, early May. We got some really strong structural failures and we started to roll over, and we're able to capitalize on some strong moves on the way down. And we are very close to being below this little structure here, the 130 level, and that would give some increased energy to the downside, let's say. However, so we were pretty much looking for opportunities to sell, but from a trading perspective, it was a little bit more difficult than that to actually trade it, just because of the very, very turbulent news and the way that news was released and the price action that we subsequently saw. But here's the plan. Certainly something that we'll be looking for is that if we get a pullback to in and around the 30.50 level, sorry, the 30.67 level, which is just in at these lows, and if we get a bit of a turnaround, we'll absolutely be looking to sell this market close to this price. Now we're currently at the 30.54, so there's not a significant move higher, but we would like this market to continue to push to the upside if we possibly could, just a little bit more, for this to be neat and concise. And yes, we do expect it to the downside. Now the 30.50 number is a significant number as well. So we'll look at a bit of a turnaround in price action in and around these kinds of prices up here. So so what we can do is we can scale down. We can look at these in smaller time frames, even a 1 minute time frame. So now what we're looking to trade, anywhere between the 30.54 and the 30.67 mark, we can look for a structural failure back to the downside. Now we would like it to be nice and neat and for it to conform with the type of trade we're looking to take. We would like it to pull back another 10 pips if we possibly could. So we're not in a hurry to sell this, but we just want to wait for the correct price action so that we can look to execute the trade effectively. So we've identified the opportunity, and that is a sell trade, going with this market price action to the downside and the overall price movement to the downside as well. So we've identified the opportunity. Now we need to stack the odds in our favor and look to sell this market and really execute this market at an optimum price to be able to sort of profit from it nicely. So we're going to look at this price action carefully. What we can do to just monitor these prices is judge and see whether we get a close above the 30.54 to the upside, and we will take a note of this low down here, which is the 30.44. So there's a 10 pip range here, and let's see, do we get from a from a price action perspective, which is how we trade these markets, if we got a double top or an M formation to the downside, if we got this little bit of movement to the downside in here, then we would expect that to be actually quite bearish if we see a double top in here. So that's potentially a trade below the 30.44. Now we want to see if this level holds up, because there is the potential for this market to just make one more move higher, at which point we'll then look to see if we can take this market to the downside. So today could just be just waiting for the move to develop and to present itself. So that's definitely a trade that we're going to look at for the day today. When we look across the other markets, there's like the dollar yen is a little bit of a counter trend move. We really do we have a strong bias to the upside in the dollar yen, and obviously we're just currently experiencing a pullback as things stand, so we just need to be super patient with that one. So we're getting the dollar Swiss just bouncing back into this long-term range, no major surprise. Dollar CAD is bouncing off this low. This could be an interesting trade to maybe capitalize on a bit of a move to the upside. For that reason, we'll have a look at this recent price action here. We'll come back to that shortly. We're seeing some dollar strength, which is definitely the call that we made. For those of you that were able to access our daily trade watch, we were looking at dollar strength early this morning, and we did actually get to see those moves, and now we're beginning to see a little bit of structural failures in these markets, and these markets pulling back off these lows. But when we identify the market conditions, we're generally in a bit of a choppy sideways moving price action. So we're seeing this little price action just as a really good example in the Aussie dollar, just moving sideways, largely between the 74.82 and the 73.43 level. So we're just bouncing in between that area, and we're getting close to that lower level as we stand. Okay, let me see. Okay, so that's what we're seeing here. The Aussie dollar just continued to move sideways. Okay, apologies for that. We're just getting a few little sort of more internal messages just popping up there. But so looking at the Aussie dollar and the New Zealand dollar, they're in the same boat. We've kind of already had the moves in those markets today. So maybe now is a time to be a little bit more patient. Obviously, we can only trade the market conditions that we see when we sit at our desk and we set up the trading conditions and what the trading session. And what you find is you can have, quiet periods during the day. And if that's the case, then you've just got to trade those conditions, and then other days you get really explosive moves. So it's one of those ones. The euro pound, just this sideways moving market really. We've obviously got a new low, and we've also got a fairly recent, very close to making a brand new high, and it's still 50-50 in terms of whether it sells off a little bit or whether it increases in value. So just choppy price action, just not really enjoying it an awful lot. Now the level for us in the euro yen is below the 129.26, and as you can see, today's low has literally bounced off that exact level, 129.25. And we want to see this market ideally close below the 145.25 level. If we get that over the course of the day, then we might see really strong move tomorrow and see some continuation to the downside. But don't be surprised if we get continuation of this little sideways moving price action here for the last number of days. Moving on to the gold market, we're threatening to push lower. The important level for us here is the 1211. See if we get a confirmed break below that level. If not, we are, our bias would very much be that this market is going to continue to move sideways. So we want to know whether we're looking to buy, sell, or do nothing. And if it's moving sideways, then we generally look to do nothing and just really look to be patient and not be too aggressive with these summer markets. Now, there'll be loads of opportunities in September for us to be super aggressive, maybe take 4, 5, 6 trades a day, whatever the case may be. But with these types of markets, you just need to be careful. We got an extended move lower today in the crude oil market off the back of yesterday's crude oil, but we're getting a bit of a bounce off the 66.99, and that's the next level to provide really strong support around this level. However, saying that, if we get a confirmed break below that level, we would expect a nice strong move to the downside, and an unraveling of this upward marching price action. So it'd be a strong structural failure if we get a break below the $67 level. Okay, so so that's US oil. So looking at the US equities, they're clearly selling off with considerable with a really strong bearish biasness, as you can see. It'll be interesting to see how these global indices play out over the course of this month going into September. Are we going to see a series of structural failures, maybe even to the downside, in the preparation for perhaps the earnings season that's due to kick in? So there's a lot of question marks held over some of these markets, and I suppose trading these markets aggressively in the month of August with all their bankers and all of the hedge funds and the politicians and everything like that, all taking a bit of a break. It's definitely something we're looking to do as well during the month of August. So we don't necessarily want to get tied up into strong positions in some of these markets, and we're really referring to the global indices. Swiss yen, strong sell-off today below the 112.38, should I say, to the downside. However, the main break to give us the high probability selling opportunities would be a break below the 111.43. So we'll keep an eye on that. And just looking at the CAC, I don't know if you're with us this evening or this afternoon, Scott, but we've had obviously a strong little pullback in these markets, but we are getting close to levels of support in and around the 54.33. So we'll see how those markets start to perform. So what we've identified is two, and this is the first thing that we wanted to see, is potentially this market pushing further up to the upside. So we're not ready to roll over to the downside just yet, and in fact, if this market can move another 6 or 7 pips, it would almost be perfect entry conditions to get into this market to the downside. Now, if we let me go back into the minute time frame. I just want to share this with you. If we analyze this move, there may be further developments where the markets are trying to gauge hawkish or dovish sentiment. So if we look to sell at this price, we may take a small losing trade, and we might look to sell again at this slightly higher level. Now, hopefully that won't be necessary. We'll just get into one trade at this. But this is the sort of level, and certainly when we trade support and resistance, we're looking for the, what is previous support becomes resistance when price is pushing higher. So if we get a structural failure around the 30.67 level, then that would constitute for us a high probability trading opportunity. Now, the reality of that as a decision means that if it fails, then we're no longer looking for opportunities to sell this market, that the market is then breaking through levels of resistance, and therefore it basically becomes a different, that we assign a different status to that particular trade because of the price action involved. Okay, so that is the pound dollar, should I say? So the cable market. So we'll split the screen. We'll stick this on the left-hand side. So what I shall do is, let me get rid of a few of these. So this lower level is still quite important. And there was the really strong structural failure to the downside, and you got a really strong move. You know, these markets moved quite a long way in just a few minutes. So you're talking about 60, 70 pip move in just sort of 3 minutes. So a little bit too fast moving really for really strong opportunities. Plus we still had Carney speaking at the time. But as you can see, things have just leveled out a little bit. We can put a double bottom in here, and then we got the reversal trade back to the upside. Now we do want to see, we know the 30-50 level is a level of resistance, and we've kind of scuppered that consideration, and now we're pushing higher, but we want to see if the 30-60 level really stacks up for us or not. So what we'd like to see is this, where we get this market just pushing back like that, creating a bit of a high in and around this area where we attempt to make a new low. We take note of that level, and we fail to make a new high, and then we just start to see this market roll back over to the downside, and that's your high probability trade set up to the downside, wherever this may be. So let's just give it the time to get into that trade, and we'll stalk the markets and wait for them to perform in which the way that we want them to perform. The alternative to that is to go chasing markets and be a little bit more aggressive during difficult market conditions, and we obviously don't recommend necessarily to do that. So pound dollar. So the other market we were looking at was the dollar CAD. So just to go back to the daily time frame, potentially there's a bit of a floor in here at the 29.83. We're above the 130 level. However, we've seen a little bit of a sell-off off these highs as things stand. So we are looking to buy. When it comes to the execution and the identification of a trade, we're looking to buy this market clearly, and we can take note of approximately the 30.36 and also the close. See if this market can close below the 30.22, then that means a trade to the upside is no longer necessarily on our cards. So trade identification, you know, we don't necessarily need to stick. You know, we want to be able to change your mind depending on the market conditions, and that's very important for traders. So that mental dexterity is a really important skill to develop, and to ebb and flow with the markets, but really do your due diligence. Make sure you look to stack those odds in your favor. You assess the market conditions, and then you have that what's called a directional bias, and that's just looking for opportunities to buy or looking for opportunities to sell. And if you can arrive at those fairly objective, straightforward decisions, you can then proactively trade those markets with hopefully a strong emphasis on risk management as well. Okay. So this is on a 15-minute time frame. Good stuff. So let's go down into these smaller time frames then, and you can see the sort of the differences. You get more information the lower time frame you go, and even on a minute time frame, straight away we have our structural failure to the upside and to the downside off these lows. So we had the double W, which is a strong impulse to the upside, but then we had a reversal signal back to the downside. So just very choppy price action. The only thing that we have going for us is the potential for this level, the 30-20 level, to provide us with a little bit of support in this market to the upside. So we're still within a 15 pip range between these highs and these lows, so no need to get too aggressive with these markets. Let's say let them unfold, and then we'll just trade them if we get those opportunities. But we do need to break above the daily highs, so that would assist us significantly. And we're talking about in between the 30.32 and the 30.58 level, somewhere in between here. We need to clear these levels and see if we get that extended move to the upside. So we're just probably 7 or 8 pips off that level as things stand. So we'll look at the dollar CAD just on a 15-minute time frame, because it might be a little bit on the slow side, and we are looking like we're going to get another little push to the upside. And if we can let this continue higher, when it does drop and it does roll over to the downside, we will hopefully look to capitalize on it. So this level here has the potential to support price, and it's currently kind of what we're seeing. So what we want to see is a structural failure in around the 30.67, somewhere between these current prices and that. And then if we get a break of this level as well, then it starts to stack up for us as a viable opportunity. In addition to that, we're not impressed with a vast, there's not that much liquidity now. A lot of the moves seem to have already occurred. We're seeing some of these markets just come off a little bit, consolidate, just continue to move sideways a little bit. And that's just effectively the market conditions that we're looking to trade. We do like the idea of the gold market edging lower, but the important level is the $66.99 or the $67 level. That is the level that we are very, very interested in indeed. It's not only a round number, it's from a psychological perspective, but I think OPEC were really hoping for this level to hold up, and if it does, then it looks quite strong to the upside once more. So what we don't want to do is necessarily sell going into a strong level of support. You know, maybe capitalize on a bit of a buy trade from these lower prices if we seem to get a bit of a turnaround opportunity, or if we get a breakout below the $67 level, then we'll look to perhaps sell this further to the downside. So we've got a couple of opportunities there to focus on. So what we might do is just revert back to a couple of these markets and just see. So we look at a dollar CAD to the right hand side, and we look at the pound, the cable market on the left hand side. So this is where patience comes into trading these markets. This is where you know, a lot of traders will actually maybe execute trades now. They see, you know, the build up of price. They see the price rolling over, but normally if you do wait just a little bit of time, wait to see the proper structure form, see if you get structural failures to the downside, then you're just taking more high probability trading setups, and especially during these market conditions as well, it's even more important. If you guys do have any questions about anything we've covered in this session, then don't hesitate to let us know. So just to be clear, we're looking to trade a little bit of dollar strength. Actually, that's kind of the purpose. So we're looking to buy the dollar CAD above 30.35, and we're looking to sell the cable market in and around this price. And now we're creating the low. So let me zoom in, and I'll just try and explain in a little bit more detail how we're looking to trade this market. So what we want to see, and for this I'm going to get my pen up, is we want to see this market create a high. In fact, it's create a double top. So that's fantastic. That's that bit done. And then we want to see the market sell off, which is effectively what we've seen. So now it's this next push to the upside that's really important, because if we break this level, then of course we're continuing to the upside, and the patience will have to continue, and we'll have to sort of gauge again for an opportunity, maybe at a higher price. However, if we fail to make a new high, that's what we're looking to see. And we're not necessarily looking to trade that failure, only unless we get a break of this structural low. So it might be a case of getting into it in and around 30.52 level, maybe something like that. But we want to see a new high be created that fails from pushing further higher. And if we get this structural failure where we get a really strong move to the downside, we might be looking to sell around that level. And that's why the patience side of things is so important. That's what we're looking to see. And I suppose trading for us is just waiting for the markets to come to us, and not really looking to force that issue, and really you know, get too aggressive with these markets. And if it conforms, and if it fits with our sort of analysis and our view, and the overall directional bias is in place, we trade it without thinking. And then it's just a case of the execution side. So it's a case of obviously managing risk effectively, and managing how the trade unfolds. But that's obviously a separate set of skills. So identifying the opportunity and looking to execute that trade is really important. And kind of this is how we go about it. But we would like to see a constructive new high. Sometimes you get these little fiddly ones here, and it rolls straight over, and it's a bit difficult to gauge over the course of a few minutes. So that's what we're looking to see, and we'll see if we get that or not. So this is the pound dollar. on the left hand side of your screen, and we're also looking for a potential buy opportunity with the dollar CAD. Okay, let's see how this trade just unfolds for the short term. Okay, so so this is actually a much better kind of bit of price action to look to see the rejection to the upside. So let's see how this, do we make a new high? Maybe we do. What I'm going to do is take a note of this high up here, and we want this price action. Well, we're actually looking to sell this market, so now this is the perfect bit of price action. So 3 or 4 minutes ago it wasn't looking great to look to sell the 30.52 level, but now we want to see a rejection of this level. We want to see if this market is going to fail to make a new high, and that's really what we want to see now, because it's failed to make a new high on a couple of occasions previously. This is the third time, and for those of you that are familiar with your price patterns, the definition of a downtrend is a series of lower highs and lower lows, and that's what we want to be trading, these structures, as the market moves in your favor. Now it looks like we are going to start breaking a new high. Okay, there we go. So if we get a close above that, then we might be pushing up to the 30.67. So clearly it's not looking to sell off just yet, and this is where like having a directional bias comes in really handy, because we're not looking to buy above this level now based on our analysis, because we know there's strong resistance just above that level, and this still has the potential to be held up at this level. So it just depends what happens. You can see that the visual reluctancy to break above the 30.60 level. So okay, it's only 2 or 3 pips. It's not an awful lot, but the price is failing to break above the 30.60 level with any consistency. So this still stacks up to the downside if we get a break below the 30.52. And don't forget, there's only an 8 pip range really between the highs here and the structural low, because we're trading 1 minute time frames, and we've already had the close below the dollar CAD, so we're not necessarily looking to sell this market. Excuse me. I suppose while we do have you guys with us, because of these summer sort of market conditions, we're finding the opportunities are thinner and thinner. So every summer we do take a couple of weeks off during the month of August. All of your bankers and your politicians are all taking a bit of time off, and what you can often be exposed to during summer trading conditions is a little bit more manipulation than usual. So it's not to say that there won't be trading opportunities. There very well may be, but those of you that have been with us over the last week or so, you'll be fully aware that the opportunities are fewer and fewer, and that is traditionally very likely to continue. That choppy price action where you get a move for a short period of time, and then the market spends the rest of the day either pulling back or just procrastinating. And what that means for traders is that it creates a very frustrating environment. So to avoid mentally, to avoid us getting into that situation, we like to take a couple of weeks off every August. So we will be taking a 2-week break, and we certainly would be advocates of traders taking a little bit of time off during this month. Wouldn't be a bad thing. Look to come back to trading perhaps towards the end of this month. We might get some preparatory moves prior to the open season and certainly the earnings season on the corporate side. So it has the potential to be a very, very volatile, very fast-moving market now between now and the end of the year. We want to be nice and fresh with it. We don't want to be literally spending hours and hours and hours in front of the charts during the month of August. So I hope that's okay with all you guys. And we're just taking a break from the live trade room, so it's the live broadcasts and the live webinars. And we'll come back nice and fresh and really look to get into trading now for the end of the year. So just feels like having just a bit of a summer break. And like I said, that's not a bad thing. So for those of you that are new subscribers to us, do feel free to take a little bit of a break as well. And hopefully you'll join us now when we come back in just over 2 weeks' time. So I just thought I'd just fill you in on that, just let you know. If any of you are joining us from the live trade room, we will still be sort of operational in the background. It's just literally the live trade rooms that we're just taking a little bit of a break from. And personally, we won't be trading our own capital and things like that for a 2-week period. So we're really going to take a really nice break really for a couple of weeks and then come back nice and fresh. So that's really the plan. Okay, so the pound dollar it's failed to make a new high, so that's really what we want to see. We do have some, let's have a look across the other. Yeah, we see the dollar's beginning to weaken now a little bit. Again, against some of these markets, they're just coming off their highs. Same with the New Zealand and the Aussie. More the Aussie than the New Zealand, but we can see that there's a and this is what we're talking about. Like if we were looking to sell, we'd be looking to get into these markets at these prices, but we're actually looking to buy. We don't want to sell going into this level of support. We'd rather be buyers of this market. So that's not a trade for us. It is potentially a trade for other traders, just not for us. So let's see. So that's the dollar CAD. Just rolling over to the downside. And we put this back up here. Okay, so now we have the close above the 30.60. So now we're looking to see how this price behaves around the 30.67. So and this is because we're nice and patient. We were waiting for the markets to conform to us, and they haven't done. So we've protected our capital and we've not got into a trade unnecessarily. So we haven't got into a trade prematurely, I think is probably the better way to put it. It's just another way to sort of assist you in protecting capital. So there's still this ascending level, just clearly supporting prices a little bit. So that's effectively what we're still seeing. And to just make it cleaner and easier, we're only expecting this market to come back to previous levels of support, and that's how we look to stack the odds in our favor when we trade these markets. If we get these opportunities to get these trades off, and sometimes we don't get the opportunity, especially over the last few weeks. Sometimes we've tracked a lot of markets like this and we just haven't seen the follow through. So the markets will always do what they want to do rather than what we want them to do, but occasionally when they fall into our trap and we set a trap for them and we get the price action following through, we get into that trade with so much confidence that we're likely to get a strong return or a strong positive result from that trade. You know, it really helps the psychology of trading these markets because we're so selective. The pressure's off, and actually being able to make objective decisions when you trade in terms of how many opportunities they are and should we take them. You know, when you go through periods like this and you're being a little bit more selective for very, very good reason, you can get yourselves into a situation where, let's say you have 4 or 5 unique opportunities in different markets. You can ask yourself, should I trade all of them? The answer is yes, you should. So it is literally swings and roundabouts, if that makes sense. During tough, difficult, choppy market conditions, you can just apply a little bit of patience and be a little bit more controlled in what you do. And then in other situations, you'll be able to take multiple trades without thinking too hard and hopefully capitalizing on some strong market runs. And that's why we have a strong emphasis on going with the market rather than looking to trade against it. Now, we're fully aware there's loads of traders that look to sell the highs and buy the lows. They look to pick the top of the market and the bottom of the market, and that's fair enough. That's their prerogative. But we certainly think that traders would really benefit from trading with the trend or with the market, even if it's only on a short-term basis, to constantly and consistently look for those opportunities where the market, you're looking to go with the market. So those counter-trend opportunities we're not fans of. We do want to be responsible with all of our traders and all of our guests that join us through YouTube, and be responsible with our trading decisions and do so from an educational perspective, to do so from very specific reasons, explain thoroughly the thinking behind a particular trade, and look to really apply the consistency and discipline that a trader needs to develop. So the idea is, if you can join us on a regular basis, you'll really pick up really strong principles and practices for you to conduct your approach to trading these markets. And we do appreciate there's different forms of trading for different traders, but what we're really talking about is being consistent with whatever you're doing, with a strong focus on either risk management or discipline in that trading process. And if you can master those, you put yourselves in a great position to be consistently profitable, because that is generally what those that can make consistent returns in this market, that's what they all have in common. They've got their approach which they are comfortable with. It suits their personality and the time that they have available and the capital they have available as well. And they know what type of trader they are. They know exactly what sort of trades they look to trade, and they follow that plan. And the more successful you become, the more confidence you have, and the more viable this whole sort of project becomes. So that's kind of the learning curve, and that's really what most retail, or those that are profitable and consistently profitable, that's what they all really genuinely have in common with each other. So at the moment on screen, looking at the pound dollar, we're still respecting this ascending level. So it's just going to be a case of just being nice and patient with this market. There's plenty of time in the trading day yet, and you can see that this market is now rolling over to the downside. So again, we go through the same process. We can make note of the high. We'll take note of the low once that's formed, and then when it starts to make a new high for ourselves, we can take note of the low, and we'll look to trade that price action next. So hopefully we'll get an opportunity to get a trade off shortly. And again, there's not fantastic opportunities across the board as things stand. So just looking through the remainder of the foreign exchange markets, looking at the gold market now. So gold's just pushing down to these lows. We really want to see how it interacts around the 1211 level. The same situation for the commodity, the oil market, the crude oil market. We want to see this market break below the 6700 to really get that structural failure to the downside. And we're likely to get some really strong, volatile trading decisions. And this was, well, we've seen such choppy trading conditions in these global equities now for a good few weeks. Even though they finished strong, either to the upside or to the downside, the reality of trading these markets are a little bit more choppier than that. So it'll be interesting to see where these markets close. There's kind of a preference really more recently to look for buy trades rather than sell trades. You're getting into some of these markets and all of a sudden they're reversing quite aggressively and retracing 60-70% of the move in these markets. So it just makes it for very, very choppy price action. And those of you that were with us 2 or 3 days ago, you'll see a nice strong explosive move, and this is a really good example of what I'm saying. We wanted to see this market break the 77.93 level, and we didn't, of course, get that opportunity. So we've had prices reverse off those highs, probably 50%. And then yesterday we were suggesting, right, what sort of day we're going to have yesterday, and we had a complete sort of reversal of that, that decent sort of move to the upside, which closed 50% down on that move. So it just builds a question mark in your mind. And yesterday and today we've had a really structural rollover to the downside. So the choppy price action is very, very likely to continue. Okay, so just one last look then. So this is what we're wanting to see. We're wanting to see the price bounce off the 30.64. We can live with that 3 pip difference really between these two levels. That's fine. That's not a significant problem to us. However, it's the next attempt to the upside that will determine what we're looking to do. So let's see if the price holds around the 30.56 level. So what we're looking for, just before I leave you guys, because I'm just conscious of the time now, is to see if we get the next attempt to the upside. If we break the 30.64 again, then no trade to the downside. We have to wait and be extra patient once more. But really we're wanting this market to fail, make a new lower high, and start to break this kind of level to the downside. And as we can see, this price has already moved lower. So this is why the bit of patience is really required, because it hasn't made its low yet. So wait until you see this little bit of upward moving price action, and then you can use that low. So we might even continue even further to the downside. So we'll have to wait and see on that one. And we're only sort of 9 pips off the high, so not a huge amount. And now we're getting that strong move to the upside as things stand. So that's the plan. That's what we're looking to do. That's what we're looking to execute in our live trade room. So guys, I do apologize. So this then does create this little structural high. We kind of want to see something a little bit more substantial. And just before I leave you, the definition of a downtrend is when you're getting that kind of moving price action. You can even often create channels where you're getting lower highs as this market is moving to the downside, followed by lower lows. And it's these structures that you can trade where you can place your stop loss above the high. And as the market moves in your favor, you can continue to manage that trade accordingly as price ticks in your direction. So so that's what sort of trading structures is all about. So we need to create the structure first. So we're seeing a strong move, whoops, to the upside. We're now clearly creating the 30.55, and we would like to see these prices, really make a proper attempt to push higher. Okay, let's take this off. So we're now kind of getting the move, even though it's so shallow. It's such a shallow move. It's virtually just a pullback still. So I'm going to treat this just as a pullback. Yes, we got one green candle in there, but that's not significant enough. We're just getting this pullback. So wherever this market effectively pulls back to, and we get that next attempt to push higher, that will determine for us whether the trade exists. This is so shallow, and especially understanding the market conditions, it's perhaps not. It's not giving us the structure that we would ordinarily like. So what we can do is we can effectively utilize this. Yes, we have broken beneath this ascending level, so that's good, and we've got a strong pullback to the 30.54. But now we want to see, a proper decent move up to maybe 30.61, something like that, before we get the rollover, the proper rollover to the downside. So we just got to be a little bit patient, really. And we do have the 30.50 level, which is just below this level as well. So we want to see a few of these things start to come together. Okay, guys, I am conscious of the time. We are going to move across to the live trade room. So for those of you that are perhaps joining us just through YouTube, you're very welcome to join us in the live trade room. We're currently offering traders, those genuinely interested in trading these markets, 14-day free trial. So you're very welcome to sign up for that. And we are taking a break for 2 weeks, and anyone that signs up this week will get an additional 2 weeks added to their access, just because we're taking a little bit of a break from these markets. So please do feel free to click on the link below, do sign up, and effectively, you'll effectively get four weeks completely free access to us here at the live trade room. You can join all of our live trade rooms. We've got 5 live trade rooms every week, and you'll be able to join them. Some of them are daily, one of them's weekly. So we have our daily trade watch every morning. We have our live trade rooms every day where we day trade the financial markets, and we also in the evenings we have our capital growth webinar for those that want to see slow growth of their capital over longer periods of time. So we're catering now for day traders and more longer term traders looking to see consistent growth of their capital. So we're offering quite a number of different live trade rooms, and I'm sure a lot of our day traders really benefit from our capital growth, because they get a heads up the night before in terms of those high probability opportunities for the next day. So it does work on many levels, and you've got nothing to lose. There is no if you do decide to join us, there's no commitment of any kind. You're just very welcome to get 14 days free access, and if you do decide to stay on, the cost to do so is incredibly, it's as low as we possibly could. So do check out the price. You might be pleasantly surprised, and hopefully it'll be a little bit of a no-brainer for you if you do decide to stay on with us. So on that note, I'd like to wish you all the best for the rest of the trading day. If there's any of our traders currently online, then please do feel free to join us over at the live trade room. I'll be over there in literally a minute or two. So we're still not getting. This is still effectively a pullback. It's quite frustrating, because we need to see a bit of a confirmed peak if we possibly can, and we're not really getting that. We'll take this over to the live trade room. So thank you as always for joining us. You're very welcome to please subscribe to the channel, you will access our daily trade watch and our YouTube live daily trade room. But you can also contact us as well on Facebook, Instagram, Twitter, and LinkedIn. The details are there currently up on screen. And as always, thank you very much for joining us. Do take care. We're going to really take a strong look at that pound dollar and see if we get some movement to the downside in the cable market for the remainder of the day. And it's just a shame that we didn't really see the opportunity unfold during the time that I've been with you all. So on that note, thank you as always for joining us. Do take care, and we look forward to seeing you all next time. For everyone here, bye for now.